guys, how are you? I'm Arshia and I hope you're doing great. Today I want to explore an interesting concept together, which is the closest perspective to the system and how it's like looking at the chart as it's really happening. How can we do this? In other styles, for example, smart money, they consider the trend in this way. That is with consecutive BOS or break of a structure. How does the classic style work and view it? They consider a line and draw it and call it a trend and determine the direction with its help. In this classic style, a special section of these people come and go into more detail and consider this as a trend. Here we have another trend. As you can see, we have seen different points of view that exist and we have pointed them out, and it cannot be said that none of them is wrong and these styles are making mistakes. On the other hand, it cannot be said that none of these styles are completely right. The topic that we want to talk about now is the closest possible state and situation to the reality of the chart, and a deep, systematic and regular look at the state that exists in the market, and together we see that the price movements are in the form that I will show you. The diagram that we have seen so far is a range that is seen frequently in the live market. The situation we see in the market is the occurrence of a breakout that is visible and creates the expectation of a trend reversal for us in the future. I will also highlight this liquidity for you, which is interesting in its own way. Now, at this point, different expectations rise regarding the market, and the market maker comes and forms such a pattern and stops out many people at this point and takes them out of the market, and also creates a schematic and movement. Again, many people think about entering the trade and get ready to enter, and it is very important that you pay special attention to this point that I have made clear to you. And so some people that I told you about who were ready to enter and take the trade, here they enter and take the trade, which can be successful and is possible, but they get a small range of movement and it is not worth the time and energy and commission that they have to pay for their account. Then there is a pattern that are waiting for, and they want to take a position from this pattern, but it does not happen, and it creates another pattern again, and after that the market direction is determined and this pattern are formed, and finally the decline occurs when we say here that we have entered the trend and we have become the main direction. But there is one thing that I need to talk to you about. Well, here it is clear how we can catch the trade, and we know how to do our trades, and this part of our scenario and the story is quite clear. But the best best thing is to wait for the breakout to happen. Now, with the confirmations that we have fully mastered and that we see here, we create our intercepts and get ready. We usually buy from here and try to save most of our profit in this area and gradually exit the trade. We trade it back and forth here again, and it comes back like this, and our entry point will be like this. We will have a TP, take profit, up to this range, and we also have our stop loss or SL. We also talked about where the TP is. This was one of the situations where we could take the trade. Another way is to consider the stop loss and SL like this, and our TP and profit are also in this area. Well, this is also from our TP. This is the first form that we could do, and it is a perspective that we have on the market. But I see that in some cases we have a series of problems, and you ask how this happened and formed. You consider this a daily trend. In the same way that you see, I will also write and specify for you D1, which means the daily time frame, and H4, which means the 4-hour time frame. Well, now what happens in H4? A similar form and schematic is created, okay? Now, how can you take back and forth trades when we are in a trend? It's a very simple matter and not complicated at all. Look, for example, in the daily time frame, you had a downtrend. Let me elaborate a little for you to explain more. We are seeing a similar movement together. What happens now? It happens like this. We said before that we were in a downtrend from the daily time frame. We are in an uptrend on the 4-hour time frame. For example, we can expect that in fact a similar thing happened here like this. Let me take this. A similar thing happened and also a change happened. We have another change from below. A change in trend occurs. Now, a series of order flow into these areas, and the price also jumps and moves upwards. Okay? So, we've come to the conclusion that there's a trend change on the 4-hour time frame, and we already know how to buy in these areas. We know we have a BOS here. We're going to take our trades with these, okay? We know all these things that we mentioned to you. Now, how do we take our trades like this when we are in a trend? Well, it is much easier than you think. The first thing is that you have to use a tool at first, which is called Feeble Retracement, which identifies this area for you, and from this point onwards, after each break that is made, we will have a correction. Okay? Now, how and with what conditions do we calculate this break that we talked about? A series of conditions are required. That a BOS must occur from here. That a break occurs, that we know that we went above a previous ceiling in the upward trend. On the other hand, let's look for a good, strong top in these areas that intersects with these areas so that later we can get our confirmation from this area, which I want to show you in different time frames. Well, that's enough for this episode. Until the next one, for now,